Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. Thank you so much for joining me today. I really appreciate it. We're obviously in a very chaotic market right now. The market is gripped by the election, the pandemic, the lockdowns, and we have earnings season here right now, which is really the big story of the day. The futures are actually trading higher right now, which is kind of more a little bit of a relief from yesterday's vicious selling. So what we're looking for today is we're really honing in our criteria for which stocks to be buying today. We have a pretty decent list. Some stocks were strong yesterday. Some stocks have been stronger over the last couple of weeks, last couple of months, and we're going to be looking to dip our toes back into those. However, earnings are the big part of today. Scheduled earnings today, pre-market is shop, after hours, Apple, Amazon, Google, Facebook, Starbucks, and ATVI. There's a lot going on today. Now, whether you trade those stocks today into earnings, I personally have not been doing that. I haven't been carrying the overnights into earnings either. I've been finding it easier to let the earnings come out, pay attention to the guidance, and then trade those stocks for the next 3 days to 2 weeks after earnings. It just seems to be trades that are following through a little bit more consistency for me. Microsoft's a good example yesterday where we closed on the lows again. We mentioned shorting it, paying attention to if it didn't go higher and trade through 216, we were going to follow the guidance and trade it with the direction that it was. So we're going to do the same thing today. But as far as some other trades, we do have some good opportunities. I want to point out one at the beginning of the call, though, which is Match.com. It was a trade that we called out yesterday, and we set some pretty strict criteria. And I really think this is where some traders who are struggling are just not going far enough. Like there's chart reading, and then there's tape reading and actually trading. And it's where you hear it's like reading the first sentence of a paragraph, but then you don't read anything else, and you think the whole paragraph is about the first sentence. When we looked at Match yesterday, and this is really more of a extension of Stocks for Breakfast, I guess, where we're going to teach a little bit something here. We were very clear to say it broke out. Now we want to see it go well bid, and that would confirm the breakout. Yesterday it did not go well bid. Yesterday it traded lower, and if you did not have the criteria and you just bought, I'm going to say recklessly with a caveat, being respectful to everybody, you didn't follow the plan. I mean, there's no other way to put it. Most traders who struggle, number one, don't have a plan. Number two, don't follow it. Number three, don't believe in it. So those that are successful, those that have a long career, those that see their account go up month after month after month, they're not jumping from strategy to strategy to strategy to strategy. They're following their edge. Their edge is what does the hard work. And that's what order flow is. That's what tape reading is. But even if you have the edge, even if you have the secret, you still have to follow it. You have to follow it all the time. So I think that trade in Match yesterday is a pretty good example that having the edge is not what will give you money. You have to use it. You have to let the edge actually do the work, which again, the video that we did this morning for Stocks for Breakfast talked about having criteria. You need criteria and you need to follow it. And if your edge works, if over time the probabilities work in your favor, you need to follow it all the time to allow the edge to do the hard work. So I just wanted to touch on that because there's some feedback I get once in a while down in the comments about that breakout didn't work or that didn't work. But trading's about probabilities. It's not about being right all the time. It's about knowing what's probably going to happen in exchange for knowing what you're definitely going to do. And that last part is up to you. That last part is on you, which is following the rules. So I'm human. Sometimes I'm a bonehead and I don't follow the rules all the time, but the more experience you get, you catch yourself much quicker. You're like, all right, dummy, don't do that. I look in the mirror, I'm like, stop. So if I can help you in any way, whether you get into the boot camp or not, the biggest thing I can tell you is that reliable trading wins. Reliable trading account growth comes from having criteria and following it. So if you're struggling right now, and especially if you're finding the market a little tough right now, there's a lot of indecision in the market right now. And if you don't recognize that indecision and you're just banging your head against the wall and trading aggressively, trading bigger share size, looking for bigger moves because that was what was available in August, you're trading the wrong market. You're not in August anymore. So we have to really be a stock picker right now. So we're going to go into the charts. We're going to take a look at some ideas. We're going to build those arguments, and then we let the edge do the work. And if you have any questions, definitely leave feedback below here. I'd love to hear from you. And if you find the videos, even if they're not, even if some of them are a little bit advanced for you, subscribe to the channel, because we're going to constantly be going over lessons and real-time lessons and how it applies to the current market. Right now, we're in a stock pickers market. Right now, we're in a market where you really need to understand sector rotation and being on top of which stocks are obvious right now, and then let go of the ones that aren't. Stop fighting the stocks that are no longer going straight up every day. That's where you say trading doesn't work, or that system doesn't work, or I can't do this. It's just a matter of paying attention. I know you can do it. If you're watching this, you have a desire to do it. You just have to get in there and do the work. I said it this morning, you got to put on your overalls and work hard. That's where the money is. All right. So I know that's like everybody says, oh, it's easy. It's easy if you have an edge and you follow it, but the hard work goes into you actually have to follow it. So if I'm calling following the rules hard work, sign me up. Sign me up. Okay, so we're going to get over to the charts. Obviously, you can see here the futures, they're actually up 19, 20. You can see that they're not really that much higher than yesterday. The moves are becoming a little bit more exaggerated. It is good sign that they're positive, but you can see that we're actually pushing down and pausing and pushing down again. So hopefully we get some footing after the market opens and we start to trade positive. Apple obviously is one of the big stories today, depending on what you normally trade. I'm actually gonna be watching Apple like a hawk today. A lot of news in the last month and a half. There's still the whole 5G thing in the universe right now, new iPhones, all that kind of stuff. For me, really, the bottom line is the line in the sand is 116. That's the level I'm watching. I'm not going to do anything until it gets above there, which could explode through that level today. But again, I'm letting my edge do the work. As I just said, I'm not holding it to earnings. I'm waiting for guidance to come out. Guidance is the number going forward. So again, 116 is the level that I'm watching there. As far as some ideas that we're trading to look to be a buyer of today, Tupperware, which was a difficult stock, after it pulled back, you can see it basically traded sideways for most of the month of October after it looked like a really good long up here. And now it's back above those levels. We said yesterday we needed to see it get above that resistance, stay above that resistance. Yesterday it did. Today we're looking for follow through. If you're not long, above 30 is the level. FSLR is another one. Really good, clean breakthrough. Held above the opening price, held the gap. Staying above 88 is the trade. Actually, an easier trade to make today because now you have a defined risk. Yesterday, you would have been risking all the way back down to 84, which is a giant number, which, again, you don't want to be risking $9 in this stock because there's not really that much on the upside to justify the $9. It is a long today, though. It's a different scenario. And you've heard me mention quite a bit that not today, tomorrow. And Hog is a good example of that as well, where Hog exploded, said, wait, get a spot to manage risk, look for a spot where it's easier to find an entry. It gave it to us yesterday. Now we're actually looking to trade what we know as an inside breakout in the direction. Now it's just a question of setting the profit target there. Snap, very similar. Snap actually was beautifully traded below yesterday. We were actually looking for what we called a bullish U-turn. We got a bullish U-turn, but not only a bullish U-turn, it actually traded and closed on the highs and became a bullish engulfing candle. So we're actually looking for Snap to follow through today as well. EXAS is another one, very similar to Hog, except this one actually had a much bigger trading range, paused, inside candlestick, much easier trade to manage today. A few other ones that we've had on the board, hopefully you've been paying attention to these. Chewy, BEKE, which is one that popped into our list probably about 5 or 6 weeks ago, and it's in the list every day now. SFIX, really nice comeback yesterday after a lower open. The stock has been trading very, very well. I talked about Match. I just want to show you the chart. Match, actually, this is what we were waiting for. It said broke through, waiting for it to go well bid. Did not go well bid, so we stayed away from it. W is an interesting one. Jeff in our community yesterday made a great argument for, well, the pandemic's a global lockdown again, should be paying attention to these stay-at-home stocks. Wayfair is one of those stocks that really benefited from the stimulus package and the stay-at-home ordering. Very competitor for Amazon, really no other way to put it. Showing some nice relative strength yesterday, closing strong, closing near the highs as the market closed near the lows. And now we got room up to 300. So pretty decent trade yesterday where we're looking to buy yesterday's high, looking for 300 as the first target. PEG is an interesting one. Really nice breakout, pulled back. I actually like this. I like the fact that it closed on the lows. Not the fact that it closed on the lows, but we have a really solid 6 weeks of buying prior to this. So the trade today is I'm looking for a lower opening and then reversing and trading back above yesterday's low. Now, again, that's the criteria. If it opens lower and keeps going down, I'm not buying it. Listen to the whole sentence, right? That's the criteria. That's what separates somebody from a chart reader to a tape reader to somebody who actually starts getting paid. You listen and put all of those pieces together. If you happen to be a short seller and you like stuff on that could possibly be going down, Visa broke monster support yesterday, and Mastercard holding that same support. So we're going to be looking for potential short sale opportunities in those stocks. Absolutely not looking to buy them. There is room to go, and Raytheon is another example of a stock that had earnings that were disappointing. Not paying attention to looking to be a buyer here. It broke support, big support at 56, minor support here at 52, with some more room to go to the downside as well. So look, the bottom line is there's plenty of opportunity right now. If you're struggling right now, you got to go a step deeper. You have to get in there and look for, you have to pay attention to sector rotation. You have to pay attention which stocks are making new highs, which stocks are making new lows, and then which stocks match your criteria. That's real trading. If you want to be a real trader in any market condition, not only in the market when the market comes out with a stimulus package or any of those kind of things, you want to look in the mirror and say, if there's money to be made, I'm going to get it because I know what I'm doing. That's what it means to be a trader. And if you like that concept, please subscribe to the channel. I'd love to have you with me here in these videos so that you can ask me questions and you can start to fully wrap your head around which stocks to stay away from, how to be in the right stocks, and then ultimately see your account go up month after month after month because you know what you're doing and because you're in the right stocks. If you have any questions, leave some feedback below the video and definitely subscribe to the channel. I'd appreciate it. Have a great day, everyone.